Hello, trading has closed on the 28th of September, 2023. As always, we'll start with our disclaimer. We'll go over our calls, we'll make some predictions. It's my trading plan for tomorrow, which is the 29th of September, 2023. Please remember I can be completely wrong, and any trade you make should be made at your own risk. I'm going to be able to follow the market for most of the day tomorrow, but not all of it, and sometime next week I'm hoping to return to my normal schedule, although I do have some personal business I think on Thursday. Well, we said if we didn't gap over these highs, we should see lower prices, but that didn't assure we would close lower, so we got that. We said if we were to gap over these highs, all the negativity of yesterday's pattern will go away. Could be a strong rally. And we also said that the elements for this low, being an oversold bottom, were all there, and that a good rally could begin. Well, I don't see any reason to change any of those things. We do get to cross a price target off our list. This was from 2 days ago, 42.95.29. That printed. There's support at that price. This green line is an FOMC price from months ago. Look how the market respects that number. It really pays to keep track of those numbers, I believe, because they can be support resistance levels well into the future. Well, this is a pretty good rally, particularly after this collapse we had yesterday, right to a target of some prior patterns that we'll show again in just a minute. This is a good rally. It would have been clearer to me if there were no overlap. That isn't a deal killer. You can have good rallies even if it's a corrective wave. And I guess you can find some way to count this as wave 1 and that 2, and this could still be wave 3 and not any rules and not break any rules, but it still would have been more convincing to me if there were no overlap, but that isn't a deal killer. Well, early on, MEJT said this rally was false. It gives us a target of 42.8704. That's this line. MEJT practically always leaves a failed target at a major change in trend, and the indicators we went over all week are compatible with yesterday's low being a major change in trend. So this might print, but I'd be happier if it didn't, and I'm not going to risk any money on that printing. We got a very weak buy signal in the afternoon. It did get satisfied. There was an optional lower target. That got satisfied too. The big advantage of the weak buy signal was it told us this drop wouldn't stick, and the price would recover and go over this line. And that's already played out. We've been looking for a drop in a low all week. Yesterday we got alignment of the 913.9 sequential and combo buy signals. 1 day at least into it, that low's holding. Any change in trend needs a confirmation. We have to go over today's close by 1 cent. But if we do, this is playing out right on schedule. If we're going to have a huge rally, we should go over the last TDST line, 45.0510, within 3 trading days. That seems kind of a stretch to me. So I think it's going to be a rally, assuming this works, but not one of those huge powerhouse moves that never let you in. We still have these volume spikes. As we said yesterday, that's typically seen in the market low. I would have been happier if the spikes were higher, but it's still a spike. And we had a nice ABC pattern with C equal to A. There's your reversal. And it's a question of how high we're going to go. I think it could be pretty high. That assumes this holds. Now, if you break it by a little bit, it doesn't kill anything. This can be an expanded flat, but it would be a lot clearer to me if this low held. Well, tomorrow's pattern has a early high regardless of where we open. Typically, it's a rally day with a high in the final hour. If you fail, it's a straight line drop. There's a lower MEJT target, and absent gapping up smartly, rules call for it to print. However, we almost always leave a failed target behind at a major change in trend, so I'd like that target to fail. Yesterday's market had the characteristics of an oversold low, as we said. Today's actions in keeping with that opinion, I see no reason to change it. Now, we still need confirmation by trading 1 cent over today's close. That's true for any move. If the standard 3-leg FOMC whipsaw plays out, which happens often but not always, we should trade significantly over the announcement price of 44.5235 on this leg. Once we do that, we should continue to 46.66 or more. That's the potential here. None of this assures going higher tomorrow, as those numbers are for an intermediate term move. But if we get what plays out the majority of the time, even if we drop tomorrow, as long as that recent low holds, these are reasonable targets for the move. So when this works, it can be a pretty strong rally. If the call for a strong rally is going to work, I would have preferred today's advance not be overlapping. However, this isn't a deal killer. Unless the pattern's ruined by subsequent action, I look for substantially higher prices in the weeks to come, regardless of what happens tomorrow. Now, we still need to follow through, and ideally we need yesterday's low to hold. Trying to call these bottoms or tops can be dangerous business, but so far it happened right at the time called for by DeMarc's indicators and by the web count and by the wave count. And we have a volatility index reversal buy signal. We have a volume spike at the low. We have the end of quarter when mutual funds no longer feel compelled to shed their portfolios of weak stocks. We have fear at an extreme level. We have puts overpowering calls. We really have all we need for a strong advance from this point, but we still need confirmation. As I said yesterday, I think if you want to catch the dagger, this is one of those times it pays to do it because your stop is significantly under this price and the target can be hundreds of handles higher. It's a pattern with the early high. Usually it's a rally day. Don't forget if it fails, it drops in a straight line. And that's today's call.